Welcome back everyone. In today's video I'm going to be talking about another important smart money concept, and like I said about liquidity, when I learned about this topic it really changed how I saw the markets and definitely improved my trading, so it's definitely something to pay attention to and learn. So as you would have seen by the title, I'm going to be talking about imbalance, explaining what it is and how you can use it, and actually giving you a few ideas to create your own strategy that's rule based. Just before we get into the video, if you are new or if you've been here for a while but still not subscribed, please do consider subscribing to the channel. It really helps me out. But let's get started. So to understand imbalance, you first need a basic understanding of supply and demand and how it moves the markets, not just Forex, but any kind of market. So you can take the example of bread. Now let's say there's a lot of demand for bread, but the supply stays the same or even decreases. What's going to happen is price is going to go up, because there's more people want to buy it and less people are, or the same amount of people are selling it. So the price is going to go up. The demand is increasing, but the supply is staying the same, so price goes up. And then the same supply increases, but demand stays the same, price is going to go down. And this is kind of basic concept of supply and demand and why price moves the way it does. Now what imbalance is when there's a big difference in buy orders and sell orders, which causes massive spikes like this, here, down here. So basically what's happening here is probably big institutions place a lot of buy orders and there's not enough sell orders to cope with it, so price pushes up loads. As we mentioned with the bread example, demand is high, but supply isn't, and so price pushes up. And then here, a lot of sell orders come in. There's a lot of supply but not much demand, so price goes down. Now the way you kind of define or like label imbalances is like the difference in price. So you'd go from the top of the wick before the big push up. That'd be the start of your imbalance. Then the end would be here. And then obviously once price taps into it, the only imbalance left is going to be here. And so the idea behind this concept is that the imbalance has to be filled eventually. It could take days, it could take weeks, it could take months, but eventually price will have to fill all of this imbalance. It doesn't have to fill it all at once. And like here, it can fill a bit of it, go up a bit, and then come down and fill it again. And there could be some imbalance left for ages. Like up here, all this imbalance still needs to be filled. So we can be confident that eventually price is going to have to come up and fill this imbalance. And there's different ways you can use this in your trading strategy. You can use it to target, as you know price is going to have to come here eventually. You can use it as a take profit, this level and this level, or you can use it for entries. And I'll be showing you both methods. This is something that you'll train your eye to see, and you'll just be able to see it in the markets. But if you're starting, or if you just want a little extra help, you can use this indicator, which I use sometimes, called Imbalance Finder. You just come in indicators and type in Imbalance Finder by Traveling Trader, I think it is. But it's this one. So just click on that, and they'll give you this, and all this stuff in yellow is imbalance. There's also different ways to use this. One thing that I've seen you can do, if you go up to like a higher time frame, say the 4 hour, all you'll see is the imbalance after a strong push up. Imbalance often gets filled and then at least like takes off again, or at least goes to the high. So one thing you can do, or here for example, is get your fib tool, mark up the imbalance, and you can have your rules, whatever you want. I've just been backtesting a bit, 50%, so you can take a buy from the 50%, targeting the top again, with your stop loss can either go below the low or just below the imbalance. So for example here, take your buy there, stop loss just below the imbalance, and take profit up there. It's a nice 1 to 2 trade. It played out quite nicely. And another example here. This one might have lost actually. Yep, I think it would have lost, but that's okay. Obviously, you're not all going to win. You've got a high risk reward, so that will make up for it. Stop. I mean, if you want to go stop it up there, and then target there, that would win. But it all depends on what rules you want to make for your strategy. You just need to make strict rules and backtest it and see if it gives you a positive edge. See, this trade would get stopped out and then eventually go in the direction, but that's just part of the game. It happens and it's fine. And you have to make rules to kind of filter out trades like this. So for example, you would say the imbalance has to cause a break of structure, then you wouldn't get into this trade. here. When the imbalance causes a break of structure. Again at 50%, stop loss above there, target the low. That's another nice trade. We'll see what the risk reward was for that one. About 1 to 3.5. So you just need to create your rules, backtest it, see what works, see what doesn't. Again here, this one would have lost. Actually, maybe it wouldn't. No, this one would have worked as well. The imbalance caused a break of structure. Buy at the 50%. And obviously, you can choose your own levels. You can choose a lower level or higher level. You have different risk reward and different win rates. So just see what works. Nice 2%. Here, would have got stopped out. So you just need to backtest it, see what your win rate is, and see if it's something that fits with your personality. But this is a way to use it for entries if you want. You can also combine it with order blocks. If there's an order block below, and you know price is quite likely to come back and fill this order block, fill the imbalance, sorry, and maybe tap into the order block before reacting off it. So that's how you can use it for entries, but if you're using it for targets, you could do, for example, I'll go for a past trade and look into a future trade. Let's say you see this area, this order block here. You could either have got in here, or you could get a lower time frame entry. You could have seen price react off the 4 hour or whatever order block, and you might be looking for this zone here. And when price doesn't tap into it, you can see Asian range manipulation. Maybe now you'd be looking for this zone. And you can get in there. You can get in whenever. But let's just say you got in at the first, just off the order block. What you can do is you can look left and see if there's any imbalance that still needs to be filled. So you still got this, you got this zone here. This area of imbalance that needs to be filled. So you can always target. You target the top, you can target the bottom, and there, that's a nice 1 to 5 trade. What this can do is just avoid, if you set your take profit to the bottom, sometimes it could react off an order block here, and it's just lower win rate if you're targeting here, but the imbalance has to be filled. So it's a nice area to target for take profits. And looking into a future trade, you've obviously got this imbalance here that all needs to be filled. So you can get like a lower time frame entry, or however you want to get your entry for bullish, targeting up here. Target the take profit at the bottom, then stop loss to break even, and then target the top. So this is ways you can use imbalance in your trading. As always, you need to backtest your strategy, make sure it works, make sure it's profitable, and then pick whichever one has the best edge. Maybe targeting the bottom has the best edge, maybe targeting the top has the best edge. That's something you'll have to find out on your own, so you actually understand why you're trading what you trade. Hopefully you've learned something, whether it be the strategy that I showed you, that you can backtest, create your own rules and see if it works, or just another concept you learned about smart money. Hopefully you found something useful, and if you have, please leave a like and subscribe, and leave a comment down below if you've got any things you'd like to learn about, any other videos you want me to make, and you can join the free Discord if you want. Get some feedback on your charts, and I'm going to be posting a setup on Euro USD later today for tomorrow, if you want to check that out. Thanks for watching.